Hello guys, welcome to my YouTube channel. In as much as I didn't want to say welcome to my YouTube channel, I just have to welcome you guys because it's a new channel, and on this channel I basically teach you guys everything you need to know about trading the financial markets. Not just trading, self-help, motivation, discipline, how to build a winning trading strategy if you're a beginner trader looking to be profitable in 2025. This channel is going to be for growth, self-development, and just connecting with other like-minded traders. I'm super excited to start this channel because I've been thinking about it for a very long time, and I just decided to start since it's a new year, new resolutions, new goals, and this has been on my mind for a very long time. So you guys are officially welcome to the channel. So in this video I'm going to be teaching you how to trade smart money concept, or SMC. If you have ever heard about smart money concept, in this video I'm going to be breaking everything down from the beginners to intermediate and then advanced as we go on in the channel, right? So let's get right into the video. So introduction to smart money concept, or SMC. So before we go in, make sure you guys follow me on Instagram at the trader, like and subscribe to this channel. Also turn on your post notifications so you can be informed when I post videos like this for you guys. So let's get right into it. So what is SMC, right? The smart money concept centers on the principle that the movement of large institutional investors in the financial market can offer valuable clues to retail traders about future market trends. Now, these institutional investors, often referred to as smart money, right? They include banks, hedge funds, and investment firms, right? For example, the Central Bank of Nigeria, they are part of smart money, right? Or the big financial institutions, because they are involved in the foreign exchange market. They have significant capital power to influence market directions. The core of SMC lies in the belief that observing and understanding the trading behaviors and patterns of these big financial institutions, then retail traders, that's you and I, we can align with their trading strategies to potentially tap into more favorable results, right? So what this means is that BFIs are the big financial institutions. They are the ones that move the market. I hope you know that we retail traders cannot move the market by one pick because we don't have that enough volume to be able to cause a significant change in price action. So we follow the big banks, the investment companies, the hedge funds. When they make moves, we try to follow their footprint in order to not be manipulated by them and to actually make profit with them, right? So let's go into the next slide. So these are the ideas in smart money concepts. The smart money concept introduces several ideas that provide traders with a framework to interpret movements through the lens of the big financial institutions and help them follow their footprints in the market, right? So like I said earlier, we are just trying to identify, right, the patterns that shows that smart money traders or smart money or the big financial institutions were involved in this particular price action. So the whole idea of SMC is just finding those patterns and finding their footprints in the market to follow them so we can make money alongside them. And basically there are three key elements when trading smart money concept. You need to be very conscious about these three elements as they make up the whole concept of SMC trading. So let's go into the next slide. So the first one, like we have here, they are called order blocks, right? Order blocks, number 1. Number 2, we have liquidity. Number 3, we have what we call fair value gap, FVG, or imbalance. So these are the basic three elements, right? There are more, but these are the most important you need to know to start trading SMC and to be consistent with it. So let's get right into it, which is the first, order blocks. So what is an order block, right? You might be asking. An order block refers to specific price areas where large market participants, such as institutional traders, have previously placed significant buy or sell orders. Clusters of orders are present in these areas which can have an impact on price movement, liquidity, and market sentiment. Okay, so the concept of order blocks is a very certain type of approach for identifying key levels. For example, the last candle before a massive move to the up or downside. These key levels are then used as an entry or exit point for trades. There are primarily two types of order blocks. We have the bullish order block and the bearish order block. So you can see here, the first example we have is the bullish order block. Now, the bullish order block is the last sell candle before the massive move to the upside, before this massive candle happened. every order block you see may not necessarily be bigger than this, right? We are not looking for an order block that is this size, or unless it's not an order block. What makes it an order block is the smallness of the size, right? How small it is. So can you see how small this is? This is the last small sell candle before the massive buy to the upside. Now when you see this is what we call an order block, the last candle before a massive move to the up or to the downside. So for this example, this is the bullish order block, and then this one we have here is the bearish order block. The last green candle, the last buy candle before the massive move to the downside. This tells you that smart money has left a footprint in this market, and then we can be waiting for price to trade back into this order block for us to follow their price action. So let's go into the next. What is an example? So this is an example of a bullish order block in the live market. So can you see this is a very tiny candle with a large wick here. This is a wick, right? And then this is the small body of the candle. Can you see what happened here? Then this is the last sell candle before the massive move to the upside, and then this forms our order block. So this is a bullish order block, and you can expect price to trade back into this order block, and then you can follow the market. So this is how it traded beautifully. This was the before of it, and then this is the after. This was the before, and then this is the after. Can you see how price came back? Then you can know that smart money were involved in this particular price action, and then it went all the way to the final take profit. So the next slide is liquidity. Now what is liquidity? This is perhaps one of the most important concepts when trading smart money concept, right? Or when trading smart money, SMC. Liquidity refers to money in the markets, and it exists everywhere on the charts, right? They are forming pools below and above key levels like trend line and support and resistance levels. Now, traders can identify areas of liquidity by looking for equal highs and equal lows, levels near trend lines, and single highs and single lows. Basically, the big banks use liquidity as fuel to drive price to their desired supply or demand zone. So take for example, you have a car, right, and you want to go from point A to point B, but you don't have fuel in that car. Can that car move? The obvious answer is no, because the car doesn't have fuel which is required to move the car from point A to point B. So in Forex or in the financial markets, but liquidity is the fuel that smart money uses to move price to their intended direction, right? So we have liquidity in forms of equal highs. That's your traditional, double top. Can you see this is equal high? This is an equal high, your double top. Then these are, this is where a lot of retail traders are putting their stop losses around this zone here, right? They are selling when price comes here, and their stop losses are above here, and price will usually manipulate them, right? That's the big banks will manipulate them, take their stop losses and use them as fuel to drive price to their intended direction. So another form of liquidity, we have equal lows, double bottom, right? So this is where retail traders are, putting their stop losses here. You'll enter from this buy and then expect price to go up. Then usually you would have the BFIs, which are the big financial institutions, manipulate them and use them as fuel to their desired point of interest. And then the other one we have here is trend line liquidity, form of a downtrend line, right? The third touch of a trend line makes a trend line more valid, and this is where big banks are looking to take the stop losses of retail traders to move price to their intended direction. We also have the uptrend line. Can you see 1, 2, 3 touches, and then you can expect price to manipulate. Basically, traders or the big banks, right, smart money uses them as liquidity to move price to their intended direction. So let's go to the next. Can you see a live example on the live chart of liquidity? So this was a trade I personally took on AUD/USD, I think, or GBP/USD. I'm going to be breaking down this trade later in the video, but you can see equal highs here, which is your traditional double top, right? You know how the retail call it. When you see a double top, it's a signal for a sell. Whereas trading smart money concept, when we see double top, it's a signal that there is liquidity sitting above here that we can use as confluences for our trade. And I'm going to be going into building your confluences, right? Before you take a trade, what are your entry criteria for taking a typical SMC trade setup? So let's go to the next slide. Now this is an example of the trend line liquidity we talked about. A trend line is has to consist of at least 2 touches to make it valid. Here we have 1 touch, a second touch, and then retail traders would want to sell from this third touch of the trend line. Their stop loss are both here, right? Their stop losses are both here to sell. So you can see what happened. For example, let's say they sold, they were in profit, they were happy, and they were moving in good profit, and then all of a sudden the big banks manipulated them, using them as fuel to drive price right to their point of interest, which is this order block here. Now, can you see how everything is coming together? We just talked about order block earlier in the video, and you can see an order block here, and then you can see the trendline liquidity and how smart money use them as price, right? Use them as fuel. I said price. How smart money use them as fuel to push them to their intended direction, right? So one touch, second touch, third touch, they sold off and they got manipulated. And this is how trendline liquidity and liquidity in general works. So it's all about stop losses of retail traders at the top or at the bottom of seeing two highs or two lows, or trendline highs and trendline lows. So the next we have here is called a fair value gap imbalance, or FVG for short. Now, a fair value gap in Forex is a price gap that occurs when there's an imbalance between buyers and sellers. It's a temporary market inefficiency that can indicate potential trading opportunities. They are visibly large momentum candles. So to cut all the long story short, FVGs or fair value gaps are big, juicy, fat candles you see in the market, right? They are those very large candles that almost have no wick, right, on their candles. For example, you can see here, this is not your regular kind of candle that's is small volume candles. Can you see how large these candles are? This tells you that they were caused by the big banks, they were caused by the BFIs, which are the big financial institutions. When you see candles like this, just know that big banks cause this volume, this large volume increase, this large momentum in the market. So this is a regular candle. Can you see how small it is? This is not a fair value gap because it is not large, it is not big, it is not it doesn't have as much momentum compared to this. So anywhere on the chart that you see candles as large as this, as big as this, just know that smart money were the ones who caused this particular move in the market. And this is the first step you need to know when identifying order blocks. You need to look at the fair value gaps, because an order block is never valid if there's no fair value gap. You might want to note that down. An order block is never valid if there is no fair value gap. So this is a first scenario, and then this is the second scenario. Can you see how large this candle is? Literally, the wicks are not meeting. So why it's called the gap is because the wicks don't connect. Can you see this wick here and this wick here? They don't connect. So this is the gap here, right? And can you see how large they are? This tells you that smart money is involved in this particular price action. And most often than not, you're going to see a little candle beside a fair value gap, which makes a demand or a supply zone, or which makes an order block. I'm going to go into this later. But in most cases, when you see a fair value gap, you would always see a demand zone or an order block behind it, or a supply zone. That is if it's going to be a sell scenario. Right? So let's go into the live chart to see how it looks like. So in real time, this is how it looks. Remember, I said large candles, right? Large impulsive momentum candles. So can you compare this candle we have here with a candle pattern like this, right? Or a candle formation like this? These are very small candles, right? Can you see they have wicks on either side? So this is not a fair value gap. There's no imbalance, right? There's no gap in these candles. It is efficient price action, right? So they are inefficient price action, and there's what we call efficient price action. So a fair value gap, this large candle is called inefficiency in the market, right? And then this one is efficient price action because there's no gap in between them. So for example, this is one order block, a fair value gap rather, and then we have a second one here. And then we said the last buy candle before a massive sell to the downside is called a supply zone or an order block. You can call it an order block in general, right? But the trend determines whether it's a supply zone or whether it's a demand zone. So here we have a supply zone because the order block is a buy order block, and then the fair value gap was to the downside. Also, we have here another example. Can you see how large these candles are? 1, 2, 3. Can you see how large they are? The wicks are not meeting, right? And this is causing an imbalance in the market. And whenever we have imbalance in the market, the price or the market has to always come back to filling this inefficiency. For example, price left this imbalance here, and then the market came back, retraced to fill in the fair value gap, and continue and then he came back again to mitigate the supply zone and sold all the way down. So I'm just going to recap from the beginning. Number one, we talked about order blocks. We said order blocks are the last candles we have before a massive move to the upside or to the downside. There are two kinds of order blocks. We have the bullish order block and the bearish order block. Then we went forward to learn about liquidity, and we said liquidity is basically where money is in the market. These are the stop losses of retail traders, and we have two primary forms of liquidity. We have the equal highs, equal lows, we have the trend line liquidity, and then we have your regular support and resistance, triple tops, triple bottoms, and so on and so forth. Alright guys, so we have come to the end of today's video. I said I was not going to make this video too long, right? So I know I said I was going to break down some of the trades I took, so I'm going to be doing that in the next video, so you want to stay tuned for that. I'm going to be breaking down trades on GBP USD, AUD USD, and Euro USD, so you guys can learn how I look at the market practically. All right, and make sure you subscribe to the channel, share this video with your friends who are traders who wants to learn how to trade SMC. And I'm going to be very consistent on this channel. I'm going to be dropping videos for you guys to make sure you stay educated in your trading and to make sure you're also growing as a trader, right? So I'll see you guys in the next. Take care of yourselves and thank you.